Today, we are diving into something that could seriously grant you generational wealth. That's right, we're talking about the top 5 Nigerian stocks I will invest in. Whether you're a seasoned investor or just starting out, these companies have the potential to boost your investments to new heights. So, grab a seat, maybe a plate of jollof, and let's get right into it. Investing in the stock market can sometimes feel like navigating the streets of Lagos, full of energy and opportunities, but also a bit unpredictable. To make the most of it, we need to identify the right routes, or in this case, the right stocks. Today, we are focusing on 5 companies. These aren't just any companies. They are leaders in their respective sectors, showing impressive growth and resilience. Let's break them down one by one and see why they are my top picks. First, we have Seplat Petroleum. Founded in 2009, Seplat is one of Nigeria's leading indigenous oil and gas companies. They operate both in Nigeria and the UK continental shelf, which gives them a solid international presence. Now, let's talk numbers. Seplat boasts a market capitalization of 2.1 trillion naira and revenue of 966 billion naira. I will quickly explain market capitalization and revenue for those of us who are not 100% sure what they are. Market capitalization is the total value of all a company's shares of stock. It's calculated by multiplying the current share price by the total number of outstanding shares. Market capitalization helps investors understand the size and value of a company in the stock market. Imagine you want to buy an apartment in a building of 100 apartments. Market capitalization is like finding out how much the entire building is worth by adding up the prices of all the individual apartments inside it. If one apartment costs 10 million naira and there are 100 apartments in the building, the market capitalization of the building is 1 billion naira because 10 million naira times 100 apartments. Revenue is the total amount of money a company earns from its business activities, such as selling products or providing services, before any expenses are deducted. Revenue is the money you get from the rent payment you receive from the tenant living in your house, before taking out repair and maintenance costs. Let us go back to reviewing Seplat. Their price-to-earnings ratio stands at 17.7. But what does that mean? The price-to-earnings ratio compares a company's current share price to its earnings per share, helping investors determine the market value of a stock relative to the company's profitability. Essentially, it shows how much investors are willing to pay for each naira of the company's earnings. Obviously, that explanation is for some people. Let me explain it for the rest of us. Imagine you want to buy a house. The price-to-earnings ratio is like looking at how much you pay for the house compared to the rent the house makes each year. If the price-to-earnings ratio is 10, it means you're paying 10 naira for every 1 naira the house earns in rent. A higher number means people think the house will make more money in the future, so they are willing to pay more now. A lower number might mean the house is already making good rent, or people aren't sure it will make more money later. So, the price-to-earnings ratio helps you decide if buying the house is a good deal based on how much rent it's earning. A price-to-earnings ratio of 15 to 20 is used sometimes as the average. Now that we understand this, let us proceed. Seplat's price-to-earnings ratio stands at 17.7, which is quite reasonable when you consider their earnings growth. They have a beta of 0.4. I will explain what beta is, don't worry. The beta is a number that shows how much a stock's price moves compared to the overall stock market. If a stock has a beta of 1, it moves exactly like the market. A beta higher than 1 means the stock is more volatile, moving more than the market. A beta less than 1 means it's less volatile and moves less than the market. This helps investors understand how risky a stock might be compared to the entire market. As usual, that explanation is for some people. Let me explain it for the rest of us. Imagine you want to buy a house to rent out. Beta is like figuring out how much the rent you get from that house goes up and down compared to the average rent of all houses in that neighborhood. So if you are buying a house at Ikeja, does the rent in that area increase by 200,000 naira every year? Or does it just increase by 20,000 naira because of bad roads? A beta of 1 means the house rent changes the same way as other houses. If most houses see their rent go up a little, so does yours. If rents go down, yours goes down too. A beta higher than 1 means the house rent changes more than other houses. If the average rent goes up by 10 naira, your rent might go up by 15 naira. But if the average rent goes down by 10 naira, your rent might drop by 15 naira. This means more excitement, but also more risk. A beta less than 1 means the house rent changes less than other houses. If the average rent goes up by 10 naira, your rent might only go up by 5 naira. If the average rent goes down by 10 naira, your rent might only drop by 5 naira. This means your rent is more stable and less risky. So, beta helps you understand how much your house rent might change compared to others, letting you decide if you're okay with taking more risks for potentially higher rewards, or if you prefer a more stable and predictable income. Seplat's beta is 0.4. This is less than 1. It is less volatile compared to the market average, offering a bit more stability, something every investor loves. But what really makes Seplat stand out is their performance. They've delivered a whopping 150% year-to-date growth and an astonishing 777% growth over the past 3 years. That's exponential growth. Their trading signals are consistently marked as strong buy across all time frames, whether hourly, daily, weekly, and monthly. Seplat's dominance in the energy sector is backed by significant reserves and strategic exploration activities. Their operational efficiency is top-notch, leading to impressive growth metrics. Plus, strategic partnerships with international oil companies enhance their technological capabilities and market reach. And let's not forget their investments in sustainable energy practices, attracting environmentally conscious investors and reducing regulatory risks. Of course, no investment is without risks. Seplat faces oil price volatility, regulatory changes in Nigeria's oil and gas sector, and geopolitical risks that could disrupt operations. But overall, Seplat's robust financial health, impressive growth, and strong market position make it a compelling choice to buy. Next on our list is United Capital. As a leading financial services conglomerate in Nigeria, United Capital offers a diverse range of services, including investment banking, asset management, securities brokerage, and insurance. Let's dive into the numbers. United Capital has a market capitalization of 363 billion naira and revenue of 24 billion naira. Their price-to-earnings ratio is 19.5, indicating potential for growth. And with a beta of 0.5, they offer moderate volatility, balancing risk and reward nicely. Performance-wise, United Capital is impressive, boasting a 163% growth year-to-date and 105% growth over 3 years. Their trading signals are consistently strong buy across all time frames, which is a strong indicator of investor confidence. What sets United Capital apart is its diverse service portfolio. Offering everything from investment banking to asset management means they cater to various market segments, reducing dependency on any single revenue stream. However, United Capital isn't without challenges. Economic fluctuations can affect investment activities and client portfolios. When people start having less money, they start investing less. Regulatory changes in the financial sector may increase compliance costs and operational complexities. Additionally, intense competition from both local and international financial institutions can impact market share and profitability. Despite these challenges, United Capital's impressive growth, strong financials, and strategic positioning make it a top investment choice. Their diversified offerings and robust market position provide a stable foundation for continued growth. Wait, have you hit the like button? Come on, just hit it. And subscribe too. Coming in at number 3 is Presco PLC, a prominent player in Nigeria's agro-allied sector. Presco is engaged in the production and processing of agricultural products, particularly palm oil. They are committed to sustainable farming practices and adding value to the agricultural sector. Let's look at the numbers. Presco has a market capitalization of 475 billion naira and revenue of 154 billion naira. Their price-to-earnings ratio is an attractive 7.6, suggesting undervaluation, a sweet spot for value investors. With a beta of 0.3, Presco is one of the least volatile stocks on our list, offering stability. Presco has seen an impressive performance with 146% year-to-date growth and 441% growth over 3 years. Their trading signals are consistently strong buy across all time frames, indicating robust investor confidence. Presco's market leadership in Nigeria's agro-allied sector, especially in palm oil production, ensures significant market share and brand recognition. Looking forward, Presco has substantial growth prospects. They are investing in expanding production facilities to meet growing domestic and international demand. However, Presco faces risks such as commodity price fluctuations, which can impact profitability. Operational risks like adverse weather conditions or pest infestations can affect production levels. Despite these challenges, Presco's impressive growth metrics, strong financial health, and commitment to sustainability make it a compelling investment opportunity. Fourth on our list is Fidelity Bank. Fidelity Bank provides a wide range of banking services, including retail banking, corporate banking, investment banking, and digital banking solutions. Let's break down the numbers. Fidelity Bank has a market capitalization of 548 billion naira and revenue of 601 billion naira. Their price-to-earnings ratio is exceptionally low at 2.3, indicating significant undervaluation, a fantastic opportunity for value investors. With a beta of 0.3, Fidelity Bank is relatively stable, offering a nice balance of risk and reward. In terms of performance, Fidelity Bank has surged 58% year-to-date growth and an astounding 562% growth over 3 years. Their trading signals are consistently strong buy across all time frames, reflecting robust investor confidence and anticipated growth. Fidelity Bank's comprehensive service offerings cater to various customer segments, enhancing revenue stability. Looking ahead, Fidelity Bank has several growth prospects. Expanding into underserved regions can capture new market segments and drive revenue growth. Introducing new financial products and services can cater to evolving customer needs and increase market share. However, Fidelity Bank faces risks such as credit risk, similar to every other bank, where potential defaults on loans can adversely affect profitability and capital adequacy. Regulatory changes in the banking sector may increase compliance costs and operational complexities. Despite these challenges, Fidelity Bank's exceptional performance, strong financial health, and strategic growth initiatives make it a top investment choice. Last but definitely not least, we have Zenith Bank, one of Nigeria's foremost financial institutions. This could have been Guarantee Trust Bank, but I invested heavily in them in 2024 already. Zenith Bank is renowned for its excellence in customer service and financial performance. They offer a wide array of banking services, including retail banking, corporate banking, investment banking, and treasury services. Let's dive into the numbers. Zenith Bank has a market capitalization of 1.4 trillion naira and revenue of 2.1 trillion naira. Their price-to-earnings ratio is an astonishing 1.3, signaling massive undervaluation, a golden opportunity for value investors. With a beta of 0.8, Zenith Bank is more volatile compared to some of our other picks. But this comes with the potential for higher returns. In terms of performance, Zenith Bank has delivered 19% year-to-date growth and 86% growth over 3 years. Their trading signals are consistently strong buy across all time frames, reflecting solid investor confidence. Zenith Bank's market leadership is evident as one of the largest banks in Nigeria by assets, customer base, and revenue. However, Zenith Bank faces challenges such as economic volatility. Macroeconomic factors like inflation, interest rates, and GDP growth can influence banking operations and profitability. Despite these challenges, Zenith Bank's substantial market capitalization and revenue underscore its dominant position in Nigeria's banking sector. The bank's low price-to-earnings ratio of 1.3 signifies significant undervaluation, making it an attractive option for value investors. So there you have it, the top 5 Nigerian stocks I will invest in. For me, Seplat Petroleum and Presco PLC are ideal for growth investors seeking high returns with their outstanding year-to-date and long-term performance. United Capital and Fidelity Bank offer great opportunities for both growth and value investors, thanks to their strong financials and low price-to-earnings ratios. Zenith Bank provides stability and significant growth potential, making it perfect for value investors looking for a solid investment with a substantial market presence. I spread my investments across these top-performing stocks to balance risk and optimize returns. Diversification helps mitigate potential losses from any single investment. I use the low price-to-earnings ratios of Fidelity Bank and Zenith Bank for value investing, while leveraging the high growth rates of Seplat Petroleum and Presco PLC for growth investing. This balance ensures a well-rounded portfolio. I will keep an eye on financial performance, market conditions, and sector dynamics to make informed decisions. The stock market is dynamic, and staying informed helps me adapt my strategies accordingly. While these top 5 stocks present compelling investment opportunities, remember to conduct your own due diligence. You are responsible for your money. I am just sharing what I will do. Stay informed about market trends and align your investments with your personal financial goals and risk tolerance. Consulting with a financial advisor can also help tailor your investment strategies to suit your needs. If you found this video helpful, give it a thumbs up, share it, and subscribe for similar type videos. Don't forget to hit the notification bell so you never miss my update. Here is my video on how to make 1 million naira when you are broke, and another video you might enjoy. Cheers.